All right, my name is Brianna Taylor. The time is now 9:21. It is 4/13/2019, and we're going to go ahead and get started with my MRA2. On this sheet that I have pulled up, we have all the provided ending balances from 2018. These are all the numbers that we are going to use to plug into all our statements and sheets. So starting with our journal entries, I'm just going to read a few off of this sheet just so you guys can get an idea of what we're doing here. Vulcan Hospital purchased a new piece of medical equipment for $125,000 cash. So the two accounts, we know it will be in inventory and cash. What we know that cash is an asset, but in this case, because we're losing cash, that will be a credit. And inventory is also an asset, and our inventory is increasing, so that will be debited. Another example, Vulcan Hospital purchased a 1-year malpractice policy for $180,000 in cash. So the two accounts will be cash and prepaid expense. Prepaid expense will be debited because we're paying for that in advance, and it's to our benefit. But we're paying for it in advance, so we're losing that cash immediately. Another one, and this will probably be the last example, and then we'll move on to the ledger. Some patients discharged who used $100,000 of inventory and whose insurance company was billed $500,000. So we have the accounts inventory expense, accounts receivable, net, patient service, revenue. So starting with revenue, we know that revenue is automatically credit. Accounts receivable will be debit in this case because that is money that we are receiving. So our asset is increasing because cash is an asset. Inventory expense will also be debited because expense is a part of debit, and inventory because that is something that is being used. Our inventory is being used. That's $100,000 to the credit side. So going on to the ledger, remember this sheet and this formula, assets plus expenses should equal your liabilities and net assets plus your revenue. So just looking at this, you get the beginning balances and you subtract all the numbers that we got from the journal entries. So for example, on one, $125,000 was credited and $125,000 was debited. So you will see that number subtracted here and added here to inventory. And so on and so forth for the next numbers, like for example 5, which is one of the examples I read out. We see inventory credited 100, debited 100, debited 500,000, and credited 500,000. So we also see 500,000 added, 100,000 subtracted, 100 added, and of course we would have to see 500 also added on the other side to even it out. And the ledger is roughly the same all throughout, so just keep that going. Make sure you check your work at the end because both sides, like in my case, both sides do equal each other, so you don't really have to worry about that. But on yours, make sure both sides equal because it will make your job a lot easier. The income statement, based on all the stuff we already were provided, so you just kind of fill in the numbers from the ledger and your journal entry. So all these numbers are numbers that we got from the ledger. So just kind of check your work, read over these and the percentages, like what value of that number is from that. So just keep in mind that everything leads up to the other. So if you mess up in your journal entries, then there's a chance that everything else is going to be wrong. So just try to keep that in mind and stay on the right track. As I mentioned in the ledger slide, everything must equal. So we know that the current assets plus fixed assets should equal your liabilities and net assets. So if you look on this side, $2,218,750 is equal to the 2,218,750 on this side. So we know that the work is correct. If I was to go through and add all the numbers together, they would equal on both sides. The cash flow, don't forget we get the cash flow from the cash column only. Not to be confused with anything else, you just get the numbers. So 1,380,000, 150,000, that will equal your net cash from operating activities. And then your net cash used for investing activities, 125,000. Then your net cash from financing activities, 500,000. And then your net increase or decrease in cash would be 155,000. And that number at the bottom should equal the number at the end, your ending balance of your cash. So let's check. 707,500 is also equal to the 707,500 at the bottom of your cash. So cool. We just checked our work on that. And now we get to the very last thing, which is ratios. The good thing about ratios is the formulas for ratios are already provided. So as long as you kind of keep that in mind, this should be easy. Current assets divided by current liabilities. So what are the current assets and current liabilities? So current liabilities, right here it says current liabilities is 122,500. And then what else are we looking for? We're looking for current assets. So let's go back to that sheet. Current assets. Our current assets is 1,213,000. So if we divide the two of those by each other, you should get 0.99. And just follow the rest of the formulas because it's pretty concrete. And as long as your numbers are right from the very beginning, then you shouldn't have to worry about what adds up and what doesn't, because the formulas are the same formulas you use for anything else. But honestly, that's the end of my MRA2. Hope you learned something. Thanks. Woohoo.